I'd like to say thanks to Sri Kulkarni sir for organizing this session and welcome to all the dignitaries on the stage. Ramesh sir has already left and Naveen sir for giving an insight to the forex part, which is an integral part of any of the exports, and all the participants present here, because it's you who form the backbone of the country. We have seen in the morning the DGFT giving the presentation on the different sources, different schemes, what are available for the exports. We have the bankers who is ready to lend you to do the exports. But how do you repay them? And the risk associated if you cannot repay them. Because quite sure nobody is going to leave the money. The bankers won't leave it. The DGFT would clearly say it's the scheme that they had given, but they are not responsible for the money. So here comes the role of ECGC, who is there to protect you, to take care of you, to help you out in times of distress, to help you out in growing your business. So I'll just take you through the presentation and how it helps an exporter in the current business scenario. Well, we were set up in 1957. That's around 68 years back. We are the pioneers of the credit insurance in the country. There are many other insurers, but yes, I would say that we cannot be matched by anyone. We are 100% owned by the Government of India. So we are purely a Government of India company with no stakes from any public or any other entities. We are recognized by IRDA in the same way as banks are recognized by RBI. So yes, IRDA is our regulator who are keeping an hawk's eye to what we do, how we do, to all our products and services, and what we provide to the exporters and to the community. We are the premier export credit agency of the country. We have been awarded as the best export credit agency by the world. And yes, when it comes to the claim paying ability, because insurance is what? Insurance is a coverage against the unknown risk or the unknown peril. Yes, we have been given the highest rating of IAAA by the ICRA for our claim paying abilities. Coming to the vision and mission, yes, our vision and mission is to provide exports through various schemes and to help the exporters through different trade related activities. Now, coming to the role of ECGC. As we said earlier, we were named Export Credit Guarantee Corporation of India. Now we are just ECGC. Our main role is to promoting exports through various schemes. I'll just be giving a brief on the various schemes that we have in the later part of my slide. But yes, we have been promoting the exports because when it comes to the export, as I said earlier, there's always a risk of the non-payment. So we provide you the coverage to those non-payments that you may expect over a period of time. Then we have two verticals. So we provide the credit protection to the banks also, because whatever advances that the banks have lended to you, exporters, and you further use it for the manufacturing of goods and services for a foreign buyer. In case that payment doesn't come to you, then it comes down to the non-payment to the bank. So we provide the coverage to the banks also. And other trade related services like we tell you about the buyers, we tell you about, even in a personal meeting, we tell you how to go ahead, whether you should do a particular business with a particular buyer or not. We have different schemes wherein we help the exporters. As you could see, we are spread across the country. We have 46 branches and 4 regional offices. So wherever in the country you could find an export center, you will find ECGC there. Yes, definitely. As Kulkarni sir said, that wherever you go, you find SBI. In the same way, wherever there is an export center, you will find ECGC over there. Now about our products. Yes, we have 2 verticals. One of the verticals which supports the exporters and the other which supports the bankers. The vertical which supports the exporters, we call it as a policy business. Whereas which supports the bankers, we call it as an ECIB business. That's the export credit insurance to banks and export credit insurance to exporters. As you could see, yes, we are covering all the products unless and until that is banned by the Government of India or DGFT. We have a fair amount of share. Yes, if we go by the present branch, as Mr. Naveen said, that yes, pharma sector is the major sector. Yes, if we go for our Hyderabad branch, yes, our major coverage is on the pharma sector. But as a whole of ECGC, yes, we have a fair amount of coverage. As you could say, engineering around 29%, agriculture 23%, chemicals and pharma 20%. But this 20% is mostly from the Hyderabad branch and to some extent to Chennai branch. Now coming to I'll be taking you through only through the policy part, wherein we are the risk that is being covered for the exporters. Any export transaction involves two types of risk. One is the commercial risk, that is the risk which is inherent on the part of the buyers. And the other is the political risk, which is inherent on the political scenario of the country. So commercial risk are those risks wherein the buyer is directly responsible for non-payment because of certain factors. So what are the factors? One is the willful default. Willful default is that the buyer has given you an order, you have sent the goods, and on the due date, buyer stops responding to you. They are not responding to your calls, emails, and the due date crosses and you don't get the payment. They don't respond to anything. So that is the willful default, that the buyer has taken it on credit and on the due date, they are not making you the payment. Other one is the insolvency, which is most common in US and European countries. Overnight, they declare themselves as an insolvent, set up a new entity and start the business again. So yes, it is generally said that the transactions to US and Europe is safe, but our record says otherwise. We have been paying the highest claims in US, European countries, Italy, Middle East. Whereas if you go over to the South African countries, West African countries, yes, our claim paying has been less. So insolvency of the buyer, wherein buyer has gone insolvent and your payment is struck up, we cover that risk. Another major risk that we cover is the repudiation risk. This risk is not covered by any other insurance in the country. What does that mean? You have got an order, you have manufactured the goods, and you have sent the goods to the buyer's country. But when it reaches the port, the buyer refuses to take the delivery. It could be of many factors. The demand has gone down, the cost has gone down, or they don't want the goods at all. So the goods are with you, the documents are with you. You are still the owner of the goods, but now you are suffering a loss. So what are the losses that you are going to suffer in this transaction? Is a transit cost, shipping cost. You would have to pay the demurrage at the buyer's port. You would have to pay the holding cost. In case if you don't find any other alternative, you will have to bring it back. So the cost of shipping liner, demurrage, holding, insurance and other things that you have incurred is the loss that you had occurred, even though the goods has not been sold. But this is the loss that you incur. It could be that you may find a different buyer in a different country who would take this good. They may take it on a discount. So that's the discount is again your loss. So yes, ECGC covers this risk and the losses that you have incurred because of this repudiation of the goods. Means the buyer has refused to take the delivery of the goods. Additionally, we also cover the risk of the default of the LC opening bank. It is generally said that LCs are the safest bet. But when it comes to the countries like Bangladesh or Western Africa, they are not as safe. Bangladesh, as on date, we have around 17 banks who have defaulted to our exporters who are holding our policies. And that includes even the large named banks. So yes, they are not the safe. So we even cover the discrepancies raised, but it has to be the major discrepancies. Now, what's the major and minor discrepancy? Major discrepancy is that the LC says that you have to make the shipment by 20th of March. You don't do the shipment by 20th of March and you do it on say 5th of April. Now it's on the mercy of the bank and the buyer whether to accept it or not. So this is a major discrepancy that you have not fulfilled the terms of the LC. Minor discrepancy, the name is changed. Chennai becomes Madras, Madras becomes Chennai. That is a minor discrepancy. Or full name has been shortened and a part of the name is just in initials and another. So that we can take it as a minor discrepancy. So those discrepancies are also covered. Coming to the political risk, which is the riskiest thing in the current global scenario. As you could say, Russia-Ukraine war, no one has predicted, but all of a sudden it came. Israel-Gaza, it had come all of a sudden. And as Mr. Naveen was saying, we are in a Trump era now. We don't know what's going to happen the next day or the next moment. So, yes, political risk is another major factor which is going to affect the transactions across the globe. So, the major political risk that we cover is the war, wherein two countries have gone into a war and your money is struck up. You are not able to get the amount back. The buyer is not at fault. It's because of the country war. Yeah, so we covered that risk. Transfer delay. There is at times it happens that there is a shortage of foreign currency in the buyer's country. Even though the local currency is available, but the currency of export transaction, that's the dollar or the euro, is not available. So the money is not about to be repatriated. So in those cases, we cover that risk. We'll make you the payment, and whenever you get the payment, you just have to repay it to us. Diversion of voice. Maybe the route is diverted. Earlier, the shipping cost was say around 3,000 USD. Now, because of the diversion, the cost has increased to 4,000 USD. This could be because of many other reasons, like the country has banned, no, we will not allow this particular ship liner to go from this country, or there could be any other attack. So, because of that, the diversion has taken place and the cost has increased. So, yes, we cover that risk. Import restriction. You had an order from the buyer, you have sent the goods, but by the time your goods reaches the buyer's country, the country has put in certain restrictions that we don't accept this particular goods from the India. So again, the buyer is not at fault, but because of the restrictions put in by the country's government, you are not going to get the payment. So the losses that you suffer because of that is covered by us. Now, this is one of the most important things, the risk not covered. As we said, we cover most of the risk, but there are certain things which we don't cover. The first among them is the dispute. It could be any dispute, but mostly it's the commercial dispute. How does the dispute rise? You have sent the goods, it's not as per the conditions mentioned in the order. So that's the dispute that has come up. I had asked for an X item, but you have sent me X plus 1 item. I don't need it. I need only X. So that's a dispute. You are going to suffer a loss. So that is not covered. How do we handle this? We always say that make it a point that whenever you get an order, there is a condition that it could be a third party who is involved in between, who says, yes, all these goods are as per the conditions mentioned in that. Once that is there, you are safe. In case of any dispute, the onus lies on the exporter to prove that this dispute is not valid. This is just created by the buyer to just avoid the payments. Then the causes that are inherent in the nature of the goods. Suppose that there are certain goods which requires a temperature of say minus 10 degrees Celsius. And you have sent it in a normal container. So definitely the goods are going to get damaged. You are not going to get your payment. So yes, because of that, the losses that are there is not covered by us. Then there are certain insurances like the transit insurance, marine insurance, fire insurance, which are covered by the general insurance companies. So any other insurance which is not covered by us are not covered by us. So these are all taken care by the general insurance companies. Then the agent. See, your contract is with the buyer, But if you have involved an agent in between who is defaulting and the cover is not taken on that, that will again be not covered by us. Then the currency fluctuation risk, as just now Mr. Naveen said, that you need to go in for the hedging, you need to go in for the forward contracts, or it's your bank, generally your bank who takes care of the fluctuation part. Or anything which is not there, if you have not fulfilled your contract, as I just said, you have to make a shipment by say 15th of March or 20th of March, and you don't do the shipment by that date, and the buyer refuses to take the delivery or he refuses to make the payment, then yes, that are again not covered by us. Now, these are basically the terms of the payment wherein the risk varies from the lowest to the highest. The first is the advance. That is one of the payments which is the safest mode, wherein you get the payments before you do the shipment. Here again, RBI has clearly mentioned that advance payment means the payment has hit your account before the generation of the BL date. Because at times we had cases wherein they said that it was an advance payment, but the payment has not come and he has sent the goods. But he said, no, it was an advance done when they are sending it. No, advance payment means that the payment has to hit your account before the BL is generated or your goods are going on for a sale. LC, it is, as I said, it's considered to be the safest bet. But then yes, country-wise, it has very huge risk, like for Bangladesh, Nepal, or for some Western African countries, LCs are not a safe bet. But yes, those are definitely one of the safest bet of doing an business transaction. DP or CAD, that's the cash against document, wherein what it means, you have sent the goods, the documents are with you. Unless and until you get the payment, you are not going to release the documents. Once you get the payment, you are releasing the documents. Again, it is said that it's not risky, but yes, this is again a risky. The reputation risk that I said is involved with DP or CAD terms of payment. Because even the documents are with you, the goods are with you, but the buyer may refuse to take the delivery of the goods. So in that case, the risk is associated with a certain cost that you may incur in sending the goods or calling back the goods. So even though most of the exporters they tell us नहीं CAD payment है, क्या risk है, इसमें कोई risk नहीं है, जब तक वो पैसा नहीं देता मैं सामान नहीं देता हूँ. But the problem is कि अगर वो पैसा नहीं दिया, if it doesn't pay you, you are going to suffer a loss, and that loss is the transit loss, the cost that you are going to incur while making a transit to the goods. So yes, but yes, definitely it's the less riskier than other terms of the payment. DA, the riskier mode, because it's a usance period, it could be 30, 60, 90, 120. So definitely you have parted with the goods, you have parted with the documents, and the payment is going to come after 30 days or 60 days or the usance period. So yes, that is one of the definitely the riskier modes of payment. And OD delivery, where RBI prohibits open transactions to all those exporters who are not status holders. As Mr. Ramesh said in the morning that they gave status holder certificates given by DGFT. So only status holders, certificate holders are allowed to do OD transactions, wherein they send the documents directly, the goods are sent to the buyer. Otherwise, RBI clearly has said that all the exporters have to route their documents without fail through the bank through which they are dealing. So the risk, as I said, the riskier terms of payment, it starts from the least risky, that is advance, LC, DP, DA, and OD. Now, during any underwriting process, there are two things that has to be taken care of. One is the country underwriting. We are the only company or the institute in India who is covering all the countries of the world. There is no restrictions on doing business to any of the countries. We are the only institute who is doing the country underwriting, and our data is sought on a daily basis even from the RBI and other banks. We are providing them a data on a daily basis about the status of the various countries. What is the status as on date? So yes, there are many factors, around 65 to 70 factors, wherein we rate the countries from A1 to D, A1 being the least risky, that's the insignificant risk. The country includes like US, certain countries of the Europe, whereas D is the riskiest country, wherein they are having very high risk. A1, it means they are highly, you can say, politically stable, economically stable. As this stability reduces, the risk increases and our rating decreases to D. Terms of payment, as I explained, yes, the premium depends on the rating of the country. The least riskier country, A1, the terms of payment, least risky, the premium rate is quite less. Otherwise, the higher the risk of the country, the higher the riskier the terms of payment, the premium rate increases. But again, being a government of entity and we have been formed to just support the exporters, yes, our premium raise varies from say around 10 paisa to it goes up to a maximum of around 1.6, 1.8 rupees per rupees 100. As I said, there were two important factors. The first was the country underwriting and the second is the buyer underwriting. We excel in rating the buyer on again many different parameters. That is again around 70 to 80 parameters on which we underwrite a buyer. And our experience over the last 65 years has said that 99% of the times, whatever we have said about the buyer has turned out to be correct. We have been helping the exporters in informing them whether to do a transaction with their particular buyer and on which terms. It could be that you want it to do on a DA terms, usance period terms. We have been suggesting no, you go ahead for a CAD basis or you do it on advance basis. Still, if you want to do it on a DA basis, usance basis, it's your risk. But yes, we have been helping out the exporters over the years in suggesting them the correct terms of payment of doing a business with a particular buyer. We, as I said in the beginning, that we are guided by IRDA, who is our regulator. So they have even asked us to do an exporter underwriting, which helps the exporter to understand and us, ECGC, to understand which type of policy is most suitable for the exporter. Earlier, we were not doing this, but over the period of time, even IRDA has asked us to do this. Yes, we have been not doing for any new exporter who comes into our fold, who doesn't have any experience. We do an underwriting for them and we suggest them the policy they should take and on what terms of basis they should do the shipment. So that is another thing that we have been taken over the years. And yes, we have been helping exporters on this also. Now we have different covers to cover your transactions. You can take a coverage on a single shipment to a particular buyer to your entire shipment. You have been doing business for many years and you feel that no, I have 20 buyers and 18 buyers are safe. Over the years, I have been taking risk on 2 buyers, so I want to cover only 2 buyers with ECGC. Rest I don't want to cover. You are most welcome. You can get it covered only for 2 buyers. You feel no, all the shipments are safe. Only these particular one shipment is a risky shipment. You are most welcome to come over and take a coverage only on that shipment. Else you feel no, I'll go ahead and do all my shipments will be covered. You are most welcome. You can come and cover. Yes. The premium rate again varies. For a single shipment, the premium will be on a higher side as compared to your whole turnover business. Because if it's a single shipment, it means that you yourself are perceiving a higher risk on that particular shipment transaction. And that is why you're coming for a coverage of that. So definitely the higher the risk, the premium will be slightly higher. If for a particular buyer you are coming, it means that out of the 18 or 20 buyers, you feel that this particular buyer is higher riskier component for me. So I want to cover only this buyer. Hence, the risk is higher, the premium will be higher. Whereas if you go for the whole turnover coverage, it means you are sharing your entire business with me, wherein it could be a good business or a bad business, good buyer, bad buyers. When you do that to me, it means you are sharing your good business also with me. You are going to pay certain premium for that good business also. Definitely the premium rate falls drastically. It could come down to even 10 paise to 12 paise from a rupee or so if you're going for a particular shipment. You can do it on exposure basis if you feel you have a very huge transaction and I cannot go it on a particular shipment basis. We can give you an exposure limit. Till that limit, your entire risk is covered. In case if your all the buyers default, we'll cover up to that particular limit. So yes, we are there to cover one shipment, one buyer, entire business on a declaration basis or on an exposure basis. Even if you have a consignment business, wherein you have your own entity set up in a foreign country, but they are ultimately selling it to the goods to the buyers. So you foresee some risk on those buyers. We cover that risk also. We'll come over. Services part, we cover the services parts also. You can take over services policy from us and we are covering that. So whatever transactions you want to do, and above all, if you feel that your transactions is not falling into whatever products we have, we are ready to customize a transaction for you. We are ready to customize a policy for you. We are ready to customize a cover for you. So from a single shipment to your entire business or to a particular customized business, whatever you want, we are at your doorstep. And yes, it goes without saying that we being a government entity, we are regulated by certain things. Any conditions not fulfilled laid down by RBI, IRDA, DGFT or customs are not covered by us. RBI lays down that only status holders can send the documents directly. If you fail to fulfill that, we don't cover. You need to take an post approval, only then we can cover that shipment. IRDA mandates that advance premium has to be there in the account. If you fail to keep the advance premium in your account, we cannot cover that. Likewise, DGFT, they have certain rules and regulations that has to be followed. If you do not follow any of them, we are not able to cover. Likewise, customs, they have certain things. Other than this, whatever may be there, whatever condition or anything is there, we are ready to cover you all. Current global scenario is a very risky proposition. I have been advocating to do the exports, taking a coverage. If you feel ECGC is not the right partner, which I can anytime deny that we are the best in the industry and nobody can match us. But still, if you feel, ECGC is not the right partner, you choose a different partner. But don't do any exports without coverage. Current global scenario, you don't know what may happen the very next moment. We have many cases wherein exporters have got bankrupt just over a night. So, do your exports. We are there to support you. Take a coverage from us or from any entity. But yes, our experience of last 68 years, the claim paying ability, nobody else can match us. So that's what I had to say. I'm available here. If you have any queries, you can just raise it. And this is our contact details. My colleagues are all available here. If you have anything, you can just ask me out. Thank you.